Hello and welcome to another Dolphin Financial Radio Show. I'm Dan Wendell, owner of the Dolphin Financial Group and your host today. We're going to be talking about health savings accounts. And now I've done a show in the past about how great these things are. They are the best number one account, but we're not going to get into the details so much about the accounts when you're young. We're going to talk about health savings accounts in retirement. How do they work? What happens when you go on Social Security? What happens with Medicare? Can you use a health savings account on Medicare? We're going to get into those details. To help me, I'm going to ask my co-host, Tony Shore, to come in right after this brief intro.
Tony, let me tell you something. We're doing a podcast today, but we're also on video.
You are about to listen to an episode of Dolphin Financial Radio. Each week, host Dan Wendell, a certified financial planner, is joined by his sidekick, Tony, to discuss financial issues, news, and tips. Dan keeps the focus on retirement planning, and Tony keeps the show fun and down to earth. Now, let's have some fun planning your retirement and begin the show.
There he is, Tony. Oh, what are you doing there, Tony? Reading Oh, there it is. He's reading my latest book. Shameless plug.
I'm sorry. During the intro, I just picked up where I left off. This is my second time through, and I just find it interesting on page 42. I think this chapter is the life, universe, and everything, and you answer all those questions in this book. That's amazing, by the way. I'm just kidding, but it's a great book. The Spending Window, Dan Wendell. See the name down there? Look at that. This is a great book. And seriously, my wife's reading it, and now she's making me do all these things that you say in here that I have to do. So
I should have warned you not to let your wife read it, because you might have to implement some of these spending strategies.
Yeah, well, we need to implement some of them. But I'm just wondering, I mean, it's all really good, and it's on intermittent spending and how it can improve our finances. Great book, so much great information. But then I get back here, like to page 80, and there's a chapter, Why Chickens Hate Snowblowers. And so there's a whole thing on that. And I mean, it's like, you're in Florida. Why would we even be talking about snowblowers in the first place? But chickens, I'm kidding. That's not in here. This is fine. Fine.
Did you get to the chapter about health savings accounts yet? Because there's not one of those in there either.
No.
just like this show, Tony. Why are you taking us off topic and shamelessly plugging my book?
Well,
I can't be mad at you, though.
I want you to tell people, Dan, how they can get a hold of this, because it's a great book and a great deal, too. I mean, obviously, they can get it for free if they set up a complimentary consultation with you. But they can also, I just went on Amazon, and got it. You offered to send me copies. Of course, I'll have to have you autograph this when we can get together again after the COVID. But yeah. I love it. I even bought copies for friends, and it's not expensive at all, and it shipped right away. I got it quickly from Amazon. So it is available on Amazon.com, and they can probably get it directly from you as well, right?
Yeah. Just the book is called The Spending Window, and you can go to spendingwindow.com, and you can connect with me. If you want a copy, let me know. Email me and see if I can get you one. I'll give you Tony's copy. He didn't want it. He had to buy it himself.
Yeah.
Support the poor, starving artist.
I mean, forget Hemingway. I mean, and they say To Kill a Mockingbird. They say, a lot of great American novelists out there. I mean, Steinbeck, whatever. Those guys, nothing. They're morons. Look at this. Is it?
All right, enough of that. Let's talk about health savings accounts. You're making me blush. So we've done in the show in the past. I quizzed you. You failed. And I said, what was my number one account? And you thought it was Roth. And I said, no, health savings account all the way. And
yeah, you surprised me with that.
Yeah. And I'm a big proponent of health savings accounts. And one of the things people get confused about, if you don't know what a health savings account, like I mentioned in the intro, please go to that show. We talk about it in detail. I'll put it right up here. You can click on that link and listen to it. But the health savings account is a tool. It's a tool to save money, and it's designed to be used for health expenses. And if you use it for health expenses, you don't pay taxes going in, meaning you can write off. If you put $1,000 in a health savings account, you don't pay taxes on that. It's like a IRA contribution in that regard. It's deductible. Then if it grows, that's great. When you take the money out and you use it for health expenses, you don't pay taxes then either. So you can put money in a health savings account and never pay taxes. That's why it's number one. Now, there's some interesting things about a health savings account, and I think the government's going to try and expand these. I would love to see that happen, but right now it has to be paired with a high deductible health plan. Now, Tony, you have one, a health savings account.
Yep.
That means you have a high deductible health plan, and I believe that's through your wife's work.
It is. Yep. Wow. How do you even? It's kind of creepy that you know this. But
I'm a fiduciary. I'm a fiduciary. I have to do what's in your best interest.
Oh yeah, well, yeah, exactly.
Put down
the
cupcake,
you know all.
Tony.
So.
Put down the cupcake. I know that this is breakfast
Breaking
time.
news! Breaking news! It's pizza.
So
for breakfast.
You have a high deductible health plan with your wife, and that means you pay money when you go to the doctor. You have to reach a certain threshold, but to offset that, you're allowed to put into a health savings account tax-free and then spend money on health services tax-free.
Right.
And that account is growing tax-free. So that is a beautiful thing. But if you don't have a high deductible health plan, then you can't contribute to an HSA. So the question I get, people love it.
Not a fan of the high deductible health plan, though. That's my problem.
I know. Well, if you use the services a lot, it could be difficult. But if you pair it with an HSA, you can get tax-free health care, which is nice.
True. Yes.
But if you're using more than you have in the HSA, then yeah, I get it. But we're not going to debate healthcare because I can go all day about that.
Yeah.
But when you go on Medicare, Medicare is not a high deductible health plan. It's a health plan, but it's not high deductible. So therefore, you can't contribute to an HSA anymore. So people say, oh no, I'm going to be going on Medicare. What's going to happen to my HSA? Am I going to have to stop using it, get rid of it? What do I do? So you can't contribute to it, but you could still use it.
Oh.
And as long as you use it for healthcare purchases in retirement, which we know we're going to have, it's still tax-free. And all the growth that you have when you don't use it, if you invest your HSA account in stocks and they double, triple, all that gain, tax-free, as long as you use it on health expenses, which is a beautiful thing in retirement because we know it. So the question becomes, well, Dan, what if I don't want to go on Medicare? I love my health plan at work. It's a high deductible plan. I want to keep contributing, but I'm turning 65. I'm going on Medicare. What then? I want to keep contributing. That's the question. Can you do that? And unfortunately, it's creeping up. People are retiring later than 65.
Yeah.
Now, the average age of retirement, Tony, is still below 65.
I find that hard to believe, though. Not people I know, that's for sure.
You're hanging out with the wrong crowd. You're hanging out with the workers.
Yeah, my neighbor Tom,
with the ladies of luxury and leisure.
He's 70 and still works for the state of Minnesota. The healthcare is better than he could get on Medicare through the state.
That's another reason. So people still work for healthcare, and I have a video on that. Why I hate the fact that people work for healthcare. It just seems backwards to me. But in the case of someone that wants to continue to work for whatever reason, and they want to keep contributing to an HSA because they know how powerful it is. They listen to my videos and say, "Oh my God, this guy's onto something. I want to put all the money in an HSA as max possible." Right. But I'm turning 65. I don't want Medicare. So what you do is you postpone it. You postpone Medicare. You don't have to take Medicare at 65 if you don't want to. Now,
so it's not automatic.
Well, it is if you take Social Security.
Ah, okay. I see.
But if you're not taking Social Security and you're saying, I don't want Medicare, and you're still working and you have coverage through work, you could say, kick the can, you sign the card, you sign the form, send it back and say, I'm declining it. And that's perfect, right? And then when you go to get it later, you don't pay an enrollment penalty. You don't pay a late enrollment penalty. That's a scary thing. If you have credible health coverage, which you do. Now, if you didn't have health coverage and you didn't take Medicare when you turn 65, then you'll pay a late enrollment penalty later.
Mm.
But we're talking about people that have an HSA account and they want to keep doing that.
Right. So they have health care. So
Right.
that's not really an issue for the people we're talking about. And a lot of people who are in that age category, most of them, if they're still working, they have some kind of health care plan, obviously. I mean, unless they're independently wealthy and don't really need it or want it. But
Right. But, you know,
so,
that's what usually happens is the people that are wealthy are the ones contributing to an HSA because they see the math. They do the numbers and
yes.
they're like, hey, I can make $30 million a year and still contribute to an HSA. I mean, that's great. There's
Yeah.
no limits. So now there's limits. You can only do, 5, 6, 7,000 depending on your age.
And it
But
has to be used for medical expenses when you use it, but you're going to
right,
have them. I mean, everybody has them,
right.
especially as we get older. I mean, what's the figure? 238,000, isn't it? That the average American will spend on healthcare in retirement.
And college, Tony? Was that a sore topic? Sorry.
We're not talking about.
Didn't mean to
No,
bring up the college
no,
cost.
we're
No.
not going there. We're not going to talk about college today, Dan, or their
No,
expenses.
no, I don't want to get depressed either. So yeah, it's a ridiculous amount of money spent on healthcare. And so you can
Yeah.
use the HSA later. So the strategy is you add to an HSA and you don't use it. You don't use it. You let it grow, you let it compound. And then later in life, you start using it. And when you use
Yes.
it, it's tax-free. Now,
Plus, you can be on Medicare then and use it then. You just can't
you
contribute.
can
if you're on-
use it on right. You can't contribute. And so
Right.
let's say you're working and you turn 65 and you say, I don't want Social Security. I don't want Medicare. I have an HSA. I'm declining it. Great. But you say, you know what? I'm 66. I've reached my full retirement age. I want Social Security, and I'm going to continue to work, and I'm going to continue to contribute to my health savings account. Can you do that? The answer is no. The reason why is because once you start Social Security, you are forced to take Part A. And there was a lawsuit about this. I can't remember the year. I'm going to say 2012, thereabouts, where somebody sued the government and said, you can't force me to take Part A. I only want Social Security. I don't want Part A, because they wanted to contribute to the HSA.
Yeah.
They wanted to
Sure.
maintain their coverage at work, but
Sure.
the government stood by it. And if you take Social Security, you are forced to take Part A, not Part B, but Part A is what matters for the high deductible plan. So you can't contribute to an HSA if you're on Social Security.
But Dan, you shouldn't be taking Social Security anyway if you're still working in a full-time job, right?
Well,
I mean,
you can.
I know you can, but you've said on past shows when we talked about Social Security, that's not a good idea, right?
Well, it doesn't always make sense because there's
Right.
income limits and they start withholding. But if you're making under, say, 18,000, you could do it, and you're before full retirement age. But once
Yeah.
you hit your full retirement age, you could continue to work and take Social Security.
Well,
The only time that really makes sense is when you have a spouse and you're delaying theirs or doing something like that.
yeah,
But that's a whole rabbit hole. We'll get into Social Security.
sure.
But what was interesting is people don't realize if you take Social Security, you're automatically enrolled in Part A.
Yeah. Yeah, and I had heard that. You've mentioned that before when we've been talking coming from the other side of it when we're talking about Medicare and the benefits of Medicare and will I automatically be enrolled? And yes, if you start taking Social Security, then you're automatically enrolled in Medicare. But if you wait to your full retirement age with Social Security, you can opt out of Medicare until that time.
That's right. Now, here's the deal, though. You can't opt out of Medicare Part A if you're on Social Security. You can
Right.
opt out of Medicare Part B. Another thing, there's a little trick that people sometimes don't realize. When you hit your full retirement age and you delay Social Security, once you hit your full retirement age, you can go back 6 months with Social Security. Say you're 67 years old,
Mhm.
you already hit your full retirement age, and you say, I'm going to turn on Social Security. You know what? I want the last 6 months payback. Give me a lump sum. And Social Security will do that. They'll go 6 months back. But
Wow.
what people don't realize is they'll retroactively put you in Part A 6 months back. So any HSA contribution you made during that time frame is null and void. So there's a penalty for that. So yeah, you got to be careful with that. That's an advanced maneuver that people don't realize. Another thing I get, Tony, what if my spouse has it? What if I'm covered for an HSA by my spouse? Can I not contribute because I'm on Medicare? Doesn't matter what age you are. It's the person that has the HSA.
Right.
So your spouse can
She can still keep
contribute.
contributing.
Right.
Yeah.
So you could be married, your spouse can be using your HSA, and you could still contribute because you're not on Medicare. But
Mhm.
if they're on Medicare, they can't contribute.
Right.
Right.
Yep.
Okay. So now we know HSA is important. You got to be careful when you are retired and making sure you understand you can't contribute to an HSA if you're on Medicare. You need a high deductible health plan, which Medicare is not. Now let's talk about, all right, I'm retired. I no longer have a high deductible plan. I'm on Social Security. I'm on Medicare. Now what? Now what does my HSA do? What can I do with it? What makes it so special now? You can continue to use it. You can use,
and it's tax-free money.
Tax-free as long as you use it for health expenses, which you're going to have, but immediately you're going to have some if you're on Medicare. You're going to pay Part B. You have to pay Part B, and I have it on here. A typo here. It's Pat B. You know, I don't know.
Oh, I knew a Pat B once. great guy, actually.
Yeah, right. Yeah, I'm gonna fix
Pat
it.
B was a great guy.
All right, there it is. It's fixed. So Part B.
A little shout out to Pat during the show today.
Part B, your Part B premium, you know, depending on what it is. Some people pay $400 a month for Part B. Depends on their income. You know, some people pay 141, you know. So immediately your Part B is going to come out of your Social Security check. And you're like, well, how do I use my HSA? It's coming out of my Social Security check. Hold that thought. You could pay Part D, your drug plan. Maybe you're paying $20 a month for a drug plan. Oh, I'm going to have it come out of my Social Security check. But I got an HSA. Can I use it for that? Yes. Medicare Advantage plans. Now in Florida, there are very few Medicare Advantage plans that actually have a premium. Most are no cost, but there are some that actually have a premium. So you can use your HSA to pay for these Medicare related premiums.
Yeah, and your prescription drugs. I mean, you're still going to end up paying something for, you know, you don't get, you know, Part D doesn't give you free meds.
No.
You have out-of-pocket expenses in retirement for healthcare. It's going to happen, so you can just use it for that. I mean, and there's a lot of things that count as healthcare that they will accept. And
they've added over-the-counter stuff too. You know, and dental work, which is a huge expense.
Yeah, I think stuff like anything from the pharmacy, like cough syrup, or I think that some HSA plans accept those things, which is amazing.
I think they cover nose clippers too. I mean, I don't know, but I wouldn't know anything about that.
Huh. So, no, I think I'm.
So
I think I'm good.
So no, but Tony, what people don't realize, and they ask me all the time, "Hey Dan, I'm signed up for Part B, I'm signed up for Part D, and I have that cost for those plans because you can't get a free drug plan. Unless you're in a Medicare Advantage, you pay. You know, I think the cheapest is like $12 a month,
right?
But it comes out of their Social Security check. They say, "Oh, now I wish I would have used my HSA." You know, so what you do is you can still have it come from your Social Security check. You just get reimbursed. So what you do is you keep a receipt, or you have a proof that you're paying your Part B premium, which comes out of your Social Security check. You could show that, and then you contact your HSA provider, whoever has that HSA, and say, "Hey, I paid for this," and they'll send you a check, your own money, out of your account into your checking account, tax free.
Yeah.
So you can get reimbursed for these things. The key is you got to keep records. And let's say you're 70 years old and you're like, I didn't know that. I've been paying Part B premiums for years now. I've had this HSA sitting over here. I wish I would have known. Dan, why didn't I listen to this video sooner? Well, that's the first problem. You should be listening to all of these. But fear not, you can retroactively go back and say, hey, I had an HSA account for 10 years. I had this health expense from 5 years ago. Here's my receipt. Boom, reimburse me for it.
Wow.
And you can get reimbursed for years of Part B premiums, Part D premiums.
That's magical, Dan. Magical. That is magical. It's magic.
See?
It's like magic. That's awesome. And
magic.
It is. So the great thing about HSAs is that money comes out tax-free. And like you say, and that's how we use ours, Dan. A lot of times we're actually getting reimbursements. So
yeah, and that's it. Each HSA provider is different. So some might give you a card you could swipe, But in the case of Social Security deduction, you can't swipe your card there, so you do reimbursement, and you could do either or. Some are integrated into your healthcare system, so it's like,
Yep.
oh yeah, just use my HSA for that. Some of them are not. So you might have an HSA at a bank, it has nothing to do with your insurance carrier or Medicare, so you have to work within their rules. A lot of times, it's just go on here, upload a receipt, boom, you're done. Or it might not even be a receipt. Yeah, I have a receipt, trust me, and they'll just send you the money. They don't care. It's on you to prove it to the IRS if there's an audit. So that's why you want to keep your receipts. But something like Medicare premiums, it comes out of your Social Security check, there's no problem there. You got those records. So the bottom line is HSA, beautiful thing at any point in life. If my kids can have an HSA, I would give, what a great gift for the grandparent to give their grandson. Hey, if your son's eligible for an HSA, give them that instead of money, gifts, college, anything. And HSAs, they're going to need health care at some point. Wouldn't it be great to use it tax-free?
Wow.
And what a gift. What a gift.
That's a great idea.
All right. Instead of just giving them cash, because you get to, so I say, hey, take this money and put it in your HSA. It comes off your taxes, blah, blah, blah. Just food for thought. And the other thought is, when you're in retirement, and sometimes taxation is a big issue, having an HSA there to replenish your cash and use that tax-free, it's just like a Roth, tax-free. It can really come in handy when you need to pay for something, but you don't want to take money out of an IRA because it's going to bump you to the next tax bracket. So HSA is really powerful.
Well, especially when it comes to taxes. I mean, and that's really what it's all about, is the money you're going to save on taxes, number one. Number two, everybody's going to have healthcare expenses. We all do. I mean, it's part of our lives, and it's great. We all know that. But it depends on people's situation, like where they're at financially and what their tax situation is. Like you said, if, you have to look at, you don't want to be bumped up into a higher tax bracket, HSAs can help. I think it really makes a lot of sense. And it seems like so much of what we talk about, Dan, so much of financial planning is really about tax implications. I mean, and I guess it's because retirement planning, all these retirement accounts and all these accounts have tax implications. And even if you just have money in the stock market, there's tax implications. And so people think, oh, I don't have to worry about taxes when I get to retirement because I won't be working anymore. Whoops.
Yeah,
it's all about taxes in retirement, isn't it? I mean, it's crazy.
And we're not just talking about tax preparation, because that's, you just pay someone to do that. We're talking about tax planning. So figuring this out, and it's really important. You make a good point. If you say, all right, I'm trying to stay at this tax bracket here, how do I do it? I need this much income. It's really difficult if all you have is an IRA. I mean, there's really not much you can do. But if you have a Roth, if you have an HSA, all of a sudden now it's starting to make sense.
Yeah. And there's now they've created so many retirement vehicles. There are other vehicles, insurance, that have good tax benefits. In other words, that's why a lot of people utilize insurance, because the money, when it comes out, if it's a cash policy and you can take the money out, it can come out tax-free, or when the benefit is paid out, it's tax-free, right?
Absolutely. And here's another biggie, Tony, which didn't exist 10 years ago. Well, maybe it has been 10 years, but the healthcare subsidies from Affordable Care Act. People not yet retired, but they're getting close to that. They make too much money to get a subsidy, but if they get a high deductible plan with a HSA, and they can take $7,000 and put it in an HSA, that comes off their income top line. Now all of a sudden their income is $7,000 lower, and now all of a sudden they qualify for a subsidy. That could be a $10,000 subsidy we're talking about, or more. Depends on the situation. If you're getting close
I see
to 60,
what you did
if you're
there.
in your 60s. So an HSA contribution, like an IRA contribution, can lower your adjusted gross income and then allow you to qualify for a healthcare subsidy that you couldn't get. And as long as you pair it with a high deductible plan, boom, there you go.
So
I have a lot of.
Those subsidies, Dan, aren't based on. So you're saying the subsidies aren't based on your gross income,
adjusted gross income, gross income. So you take off an IRA contribution. You take off a health savings account.
Oh, so that's really good.
So I'll give you an example. A 62-year-old couple, They're close to Medicare, but they're still buying health insurance. Maybe they're retired and they have the income they need, but their income, let's say, is $68,000 and the subsidy level is 65. So they make too much. They get zero. They throw $3,000 into an HSA account. All of a sudden, they now qualify for a $10,000 a year subsidy for healthcare.
Wow. That's huge.
And it's a hard cutoff, Tony. It's a hard cutoff of $1. So a $20 health savings account contribution couldn't make the difference between some subsidy and no subsidy.
So it might not even be thousands. It could be a $20 HSA contribution that could allow you to get that $10,000 subsidy. That's huge. That's unbelievable.
So that's why because people understand that with an IRA contribution, but sometimes they make too much or they just can't. They've already maxed out their IRA contribution. They're like, oh, now what? I got nothing left. Look at the HSA.
Wow.
So yeah, that's it. I'm thinking that HSAs are the #1 tool still, even in retirement.
Wow.
Perhaps more so.
Wow. And I'm not hearing this out there from a lot of people. I mean, I hear once in a while, you hear, hey, HSAs are great. They're a great tool to utilize. You hear that, but you don't really hear it explained. I mean, I listen to a lot of financial podcasts and radio shows and read a lot of financial books. This one, I'd recommend it. The guy, actually, I'm looking for typos to give you some crap, but I haven't give you grief. I haven't found any.
My co-author's a doctor, so he is a little bit more cerebral than I am.
We're all looking for typos in your book, Dan.
Oh, man, this is going downhill. We're going downhill. I'm going to end it here, Tony. Thanks for another great show. Folks out there, make sure if you don't have an HSA, you get one. If you can't get one, well, it's unfortunate, but there are rules. I have a feeling, Tony, down the road, Congress is going to make some rules that allow everyone to get an HSA. That would be the greatest healthcare financial thing that they could do for everyone, in my personal opinion.
Wow.
But who knows? That's a pipe dream, but I've heard rumblings in it in Congress for the past 5 years, so you never know.
Yeah.
But thanks for a good show, everyone, and enjoy the rest of the day.
All matters discussed in today's show are for informational purposes only.
This show is not investment advice.
Dan Wendell nor Dolphin Financial Group are affiliated or endorsed by any government agency.
Investment advisory services are offered through Dolphin Wealth Management, Inc., a registered investment advisor in the state of Florida.
Insurance products and services are offered through Dolphin Insurance, Inc.
Dolphin Wealth Management, Inc. and Dolphin Insurance, Inc. are affiliated companies doing businesses as Dolphin Financial Group.
You should talk to someone at Dolphin Financial Group before implementing any of these strategies or ideas.